Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will give an update on inventory and discuss Zillow's predictions for the 2023/24 housing market. Today is Monday, April 24th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Welcome back to another week on the Hot Sheet, the only place you can find a daily live stream for everything you need to know in a 24-hour window for the housing market. Hit the thumbs up and please consider sharing this with someone who could benefit from this information. And finally, we are starting off a Monday with good inventory news. Now, I'm not going to get ahead of myself until we see it double down next week, but this is a great sign according to the housing market tracker on Housing Wire. Active listings rose by 8,546. That's an incredible increase from what we've seen as of late. It tells me that this could be the moment where we see that bottoming out of inventory, and we start to increase through the rest of the spring market. That's what we're looking for, to supply the market with enough homes and bring prices to an affordable level, or at least meet the demand on the home shoppers that are looking in these affordable price ranges. Remember, last week inventory fell 5,383 for active listings. That was from the week prior. We only had 800 increase. So it was a big drop when we were hoping to see a bottom a couple weeks ago. This one is significant enough where, hey, maybe this truly is the bottom, and we're going to continue to add inventory as we traditionally do in the spring. Usually comes earlier in April, maybe even late March. Here we are at the end of April. So you'd be able to take a guess historically that now's the time we're going to start to see inventory add up over the spring market. If we get a double down next week, that'll be a really good sign. If we drop again, then this week might just mean that we had a little bit of pent up, listings that stalled with the April holiday. Okay, so that's kind of the fear out here. We talked about it on Knowledge Brokers Podcast. You can go check out that channel at Knowledge Brokers Podcast. And Logan, in his piece in Housing Wire, he also references it. The Easter holiday could have slowed some people down. And then now all of a sudden you got everybody coming out in the same week. Weekly inventory rose from 405,000 to 414,000. So there's the 8,000 plus increase. Same week last year, we also saw a rise. We had already bottomed out by this time last year, and inventory rose 267K to 271K. The bottom for 2022 was 240,000. So far, the peak in 2023 is 472,000. Active listings for this week in 2015 was 1,059,000. So we're still near an all-time low for active listings. You can see here on the inventory chart going all the way back into 2015, 2016. We're at a really low point overall, but hopefully we've seen the bottom. We know that to have a healthier real estate market, we're going to need to see this listing number increase. Okay, so new listings. Let's take a look at new listings as we always do. These charts are available for you, and as well as all of our sources in the daily download. And finally, we have a new listing week that meets that of 2022, essentially. As I zoom in here, you can see the black line of 23 is actually touching 2022. We did have a dip down this week last year, but good news is we are starting to catch up on the new listings. We need to see more people listing their homes if we want this overall inventory to increase. So this week we had 59,926. Still not quite the same amount of new listings as last year when we saw 60,351 on the dip for that particular week. This time last year in 2021, we had almost 70,000. We had 69,000 plus new listings. 2015, we had 89,000. 2016, we had 95,000. 2017, 77,000. So still well off of the mark of a normal market for new listings. This is the season when you typically will see new listings increase, and going into May and June and July. Listen, May's the time to make hay as a real estate agent. Make your hay in May. May, June, July are going to be the best months, the best opportunities. Hit the thumbs up if you agree, for real estate agents to help serve people who want to buy, sell, and invest in 2023. There's going to be a large grouping of deals as this recession hits later in the year. I want to have some money saved up for quarter four if I'm a real estate agent. Quarter four looks like, look at historically and the last couple of years, you can see what quarter four looks like. It's abysmal, and it could be even worse this year. So really take advantage of this opportunity ahead the next 90, 120 days. I think the first break for agents is going to come in the first couple weeks of July. But until then, I'd have my head down if I'm a real estate agent, if I'm looking for deals out there, because this is going to be the grouping. This is going to be the time frame when the majority of the people take action. Because think about it, most people that are doing deals in 2023, NAR just came out, last week and said they're only expecting 4.4 million transactions. Now I get it, that's 9 million sides, but that's well off of what we've seen the last couple of years. So if you're one of those 4 million, transactions that are going to take place, it's because you have a strong need, a strong desire to move. Jody says 2.2 months of supply as of March 2023 for OKC MLS, and that's just under the national trend, which is 2.6 months of supply. We're going to talk about that here right now. We're going to move to months. Jody, thank you for the segue. Beautiful segue. Let's take a look at months of supply historically. Okay. Here we go. 1999 to 2014. This is a great chart, and it's down below in our daily download for everybody that says we're going to see a 2008, time frame here in real estate. That's coming. Actually, in fact, one of my past clients, he's working with an agent on my team up in Connecticut. He sent the agent a tweet from Twitter. He says, "Look, some idiot on Twitter says it's 2008 all over again. We're gonna have 20%, drop in prices. So I'm gonna pause the home search. I'm just gonna chill out here and wait for these 20% drops." And I said, "Hey, send over that CoreLogic chart that I've put on here, and it's a fortune chart that a bit like we're gonna see us get back to peak prices from last year before the end of this year. That prices are now have hit their bottom and that they are going up." And that, hey, 2008 is completely a different ball game than right now. Look at how much inventory we had. Even in 2006, when things were still hot, we had over 6 months of inventory. NAR says that 6 months of inventory is a normal market. That's the way that I was trained. Redfin uses 5 months. Logan from Housing Wire likes to use 4 months. Four is low. I would disagree with Logan there. But he's looking at 99 to 05. And saying that you're averaging at 4.5. So I think that's where he's getting. I don't want to put words in his mouth, but maybe that's where he's getting his number. Anyways, NAR has always said a balanced market, a normal market, is 6 months of inventory. It's also how a lot of real estate schools teach it. Not like the schools that you get your license. I'm talking like universities that actually some of them do teach real estate. Okay, and you can see in 2006 through 2011. You had well over 6 months of inventory. In fact, in 07 or in 08 to 2010, you were close to double digits in all of those years. And then in 2014, you got back closer to the line. 2012, you got to 6 months. And then 2014, you were at 5.2 months. Today, we're at 2.6 months. Today, we're at 2.6 months. That's insane. We would be like, we'd be like right here today, nowhere close to a normal market. Okay. So for everybody that says this is similar to 2008, here's another data point to show them. You could also show them how little credit is in the market right now. Credit has tightened up significantly. It's not easy to go and get a mortgage. You listen to the most recent economic insights with, I did not listen to this. If you want to send it to me, I'd love to take a listen, Don. January 2010, 5-month supply for the entire MLS, and this is in that OKC market. Now you're at the 2.2, and this is reflective of most of America, where the average is again 2.6, but most of America, and I'd love to know what it is in your market. What's the months of supply look like? This is actually driving those multiple offers more than demand is, because we know that mortgage demand is down. We know 3 out of 10 deals are going to be cash. I get that. But 7 out of 10 are mortgage, and mortgage demand is down significantly. But what's driving these multiple offers and this perception of high demand is the lack of inventory. So we finally had a week where inventory shot up. If we can see a doubling down next week, that means we've likely hit our bottom. And that would be the signal for sellers to get off the fence and go now. Don't wait until July, when we have the seasonality increase of inventory that we've historically had and that we're hoping to have this year. Okay. I hope that you are operating in a market inside of one of Zillow's predictions to go up. Zillow is predicting that we will have 294 markets to see home price gains, while 102 markets will tick lower. This is a piece from Lance Lambert in Fortune. Okay, so among the 400 largest housing markets tracked by Zillow, the company expects 294 markets to see positive home price growth between March 2023 and March 2024. It expects 4 markets to remain flat and home prices to fall over the next 12 months in 102 markets. Just 1 month ago, when Zillow came out with these numbers, they only expected 238 markets to rise between February 2023 and February 2024. Okay, so they expected 156 to decline. So those numbers over the last 3 months, month over month over month, have gotten better in terms of home price increases. I referenced the CoreLogic numbers, and we're going to get Case-Shiller's numbers tomorrow. Okay, and that's the big one. I know that the Case-Shiller is lagging, but that's the big one to say, hey, have we hit our bottoming on prices that many are predicting and what Zillow is predicting? So let's take a closer look at what Zillow is looking at. And so these are how regional home values are expected to shift over the next 12 months, according to Zillow. So you still see the West having the sharpest declines, California, as well as Louisiana and parts of Texas. You do start to see some of this shifting in the Northeast, which hasn't happened yet. Zillow is expecting the Southeast to have a bounce back, right? Florida, we talked about it on last week's hot sheet. Central Florida is down right now over the first quarter in home prices, not South Florida and not the Panhandle. But Zillow is expecting Florida, the Carolinas, Georgia, the southeast corner of the country over the next 12 months to start trending back up. Interesting. Decline in regional home prices since the respective pandemic era peak. And you can see that the West has been hit the hardest with interest rates. And here you do see that Central Florida region that I just referenced having that sharp decline. The Northeast is pretty strong, still mostly blue, mostly up on prices or at least flat outside of that Boston, Cape Cod area. And then you do see pockets of Texas and again, Louisiana and some pockets sprinkled into the East that have a regional home price decline over since their pandemic era peak. Okay. John Burns put out an interesting little diagram here where they're saying only 25% of markets are below normal. Okay. So below normal right now, according to John Burns. 0% are at very strong. 28% of markets are considered strong right now, and 47% of normal. So only 25% of the country is now experiencing below normal new home sales and pricing trends. This is according to data from John Burns. All right. Again, on the Zillow data, they're improving from last month, and more markets, according to Zillow, are getting into that normal or even strong category as we project out over the next 12 months. Okay, so there's a lot of belief, and I'm looking forward to tomorrow's Case-Shiller numbers that we have hit our bottom on pricing. Some of the markets that Zillow expects some of the biggest home price gains would be Knoxville, Tennessee, at 4.5%, Savannah, Georgia at 4.5%, Winston-Salem at 4.4%, Johnson City, Tennessee at 4.2%. Last week's hot sheet, if you missed any of last week's hot sheet, definitely go catch up. We had a whole bunch of information, and we went through, like Tennessee, for example. Almost all of Tennessee was up outside of the major cities in the first quarter of the year. And so Zillow is expecting a lot of Tennessee here to continue to go up. Wilmington, North Carolina. Simply put, Zillow's forecast model expects a great deal of strength in the U.S. Southeast. We saw that on the chart. Many markets have already seen prices bottom out, and those price declines may be helping entice more buyers this spring. Jeff Tucker, senior economist at Zillow, is quoted in the Fortune piece. The very low levels of inventory is a likely major reason in home prices. However, Zillow do expect price declines to occur between March 23 and March 24 in markets like San Francisco, Boulder, Denver, Reno, and Las Vegas. Okay. So there you go. And you've got the chart for you. And listen, I can go and in the comments, if you want me to click on a specific area, not Pacific. I just saw maybe that's why I said that. I just saw a TikTok, somebody trying to say specific before a Zoom call, and they say Pacific Ocean like 12 times on the Zoom call. Anyways, this chart that I have here is interactive. And so if we go here, here's how they expect them to increase over the next 12 months. It'll show you actually like Miami, 2.6%. Okay. If we go to like what's this red here in Connecticut, for example? So Hartford, they expect to be down 0.9. Long Island, 0.4. Okay, what's this pocket here in red in North Carolina? Goldsboro is the only North Carolina market that they expect a decline, according to Zillow, at 2% for that particular area. Virginia Beach, Norfolk, Newport News, 0.2% decline. So essentially flat there. These Louisiana markets are really taking a beating. Some of these are down from the peak of COVID. You can see here that they're expecting even sharper declines throughout the next 12 months. Lake Charles, 6.8% decrease. Okay. If we look at Midland, Texas, Zillow expects a 3.5% drop. Austin area, essentially flat for Austin. They've seen their price declines, and so Zillow would expect over the next 12 months Austin to be pretty flat. If we go all the way west here, San Jose, 2.6% decline. Santa Maria, they're expecting an increase. Santa Barbara, 3.3%. Okay, so they're saying that price is bottomed out there. Okay, Fresno, Bakersfield, increase. LA, basically, talking about 1% there. So there you go. If you got any locations here quickly, I can jump into those. You do have Boston, slight decline. So this is Zillow's predictions. Again, tomorrow I'm looking forward to 3 reports. So make sure that if you're not subscribed to this channel right now, you do that and you hit the notification bell. Put notifications on, especially if you want to be here for tomorrow's live stream. We've got the Case-Shiller home price report tomorrow. We've got FHFA home price index tomorrow, as well as new home sales report. This Thursday, we're going to get pending home sales, but tomorrow we've got 3 big housing reports to go over. We're going to go into them in detail on this hot sheet. Later today here on the channel, at 11 a.m. premiering, we have Monica Church on Overash. She's got 1.5 million YouTube subscribers. You do not want to miss that. Okay, let's see if we're going to miss here on the 10-year. We want the 10-year to go down. So far today, it is trending down. We're at 3.532, kind of flat off of where we were to end the week. We did end the week on the 30-year at this was a way to go into the weekend here, huh? 6.66 after spending the entire week between 6.61 and as high as 6.75. Hopefully, with the 10-year dropping, we can get off that 666 number and start trending back, hopefully towards 6.5. Okay, we've got a last call going on for the BAM Mastermind on Cinco de Mayo, May 5th. Come down here to Naples, Florida, spend the entire day with myself, Eric the Broke Agent, Ken Pozak, Dan O'Neill, and Bobby the Producer. We're going to go over Instagram, a plan designed specifically for you, a YouTube channel built out specifically for you, and as well as how to manage the editing, whether that's in-house or outsource. Going to get to spend the whole day. So any question that you have, we're going to be able to dig into it. And we've got some benefits happening after the mastermind. Everything's included, the golf, all of the content, obviously, all the training that we're going to be doing there, as well as all of the meals. So make sure you come down. Cinco de Mayo. This is literally the last call here these next couple days. We have the link below, and grab one of those spots. Come down here, Cinco de Mayo. The BAM Mastermind hosted at the Tiburon Ritz-Carlton here in Naples. All right, big day tomorrow, 3 housing reports. Appreciate everybody coming in here on the live stream. If you're on the replay or if you're listening on Spotify or Apple, love for you to consider leaving a review here for the hot sheet. And we'll see you back here tomorrow, 9:30 a.m. Eastern, 6:30 Pacific time. Until then, toodaloo.